Hi, and welcome to the Midday Market Update for June 4th, 2020. My name's Kevin Hill, and as always, sitting here next to the one and only Michael Vincent.
Good afternoon, everybody.
We're about to take you through the freight markets for this Thursday.
Yeah, and just a reminder, it's an interactive show. So get your questions, comments in on FreightWaves Live LinkedIn and on Facebook. We'll respond to those and get your questions answered as best that we possibly can.
Yep,
Who we got on the show today, man?
We're up and live on all those channels, and we're monitoring this. So we encourage everyone to send us your questions, comments. It's fully interactive, and we have a great show lined up today. Our outside guest at 12:30 is Ruthie Amaru.
Well, at 12:30 is actually Jason Miller, Associate Professor of Logistics at Eli Broad College of Business, Michigan State University. And then at 12:40 is Ruthie Amaru, correct? CEO of Freightos.com business unit.
Yeah. And as always, we have Andrew Cox on the news desk, reading the news headlines from FreightWaves.com. And we have our own Zach Strickland, Director of Freight Market Intelligence, talking about the freight markets and the economy and jobless claims are on Thursday. And we'll be talking about jobless claims with our lead economist, Anthony Smith. So let's get it kicked over and started
with the news. And Andrew,
what are the news headlines today, Andrew Cox?
Yeah, Kevin, peaceful protests and civil unrest have broken out in about 140 cities across the U.S. for the past 8 days in protest of the killing of George Floyd in police custody in Minneapolis. Fears about public safety have left truckers, especially who deliver freight into many of the affected areas, on edge. It's been nearly 30 years since the truck driver Reginald Denny was pulled from his cab and beaten during the 1992 L.A. riots after he wandered into the wrong area. But although it's been 30 years, that night is still on many truck drivers' minds. It even became a saying for many truck drivers. They say that nobody's going to Reginald Denny me. So truck drivers are tasked with delivering a lot of valuable and important goods directly into many of the areas that protesters have been there and taking place in the protests. Luckily, drivers now have a lot more information than they did back in 1992 about real-time hotspots, about where the protests are going on and where they should avoid. Back then, they only had pretty much the radio to listen to. And we actually spoke to a couple of truck drivers to get their take on what was going on. Ronnie Sellers of Knoxville, Tennessee, he sees the importance of trucker safety on both sides, not only as a former owner of a small trucking company, but he also spent 30 years with the Knoxville Police Department and finished his career as the captain of the Alcoa Police Force. And he says after watching what had escalated in Minneapolis and some of the other cities in which protests had gotten violent and looting had begun, he says that there's absolutely nothing on the back of those trucks, in those trailers, that's worth risking a driver's life. So he says if it's a forced dispatch or not, you just can't drive into a riot situation because you're going to lose. He also urges drivers to follow the city curfews that are in place and avoid being caught in the crossfire after dark. He says the police department has a difficult time determining and distinguishing between who's the bad guys and who's the good guys after dark. So he says avoid the situation at all costs.
Yeah, solid advice, right? I mean, it's not the delivery's not worth your life, and don't be a hero, be smart. You got plenty of resources for information, and everybody try and stay safe out there.
Yeah, let's all of us stay safe out there. And talking about staying safe, amidst the pandemic, it looks like freight forwarders are returning back to the offices. So I think that's a Chris Gillish article from FreightWaves.com. What do we have there, Andrew?
Yeah, Kevin, after several months of stay-at-home orders, America's customs and brokerage and freight forwarding firms are now beginning to trickle back into the office and reopen some of those offices. They have those plans for the week and the months ahead. However, these companies do not anticipate ever returning, or at least for the meantime, returning to pre-COVID conditions. Philadelphia-based BPD, which has branch offices throughout North America and the world, has begun implementing a phased plan for returning employees to their offices and when local restrictions are lifted. This plan takes into account the World Health Organization's and the CDC's and local governments' health and safety guidance measures. The CEO, Lissy, said that the plan to safely reopen BDP offices include a range of requirements, including mandatory office cleanings, hand sanitizer stations, employee health screenings and face masks, and social distancing. Office managers will ensure that these measures are strictly enforced. Companies are now looking forward to phased returns as many of the employees in situations with childcare. Many of the schools are not open yet and childcares remain closed, so they are working with their employees to see how they can phase people back in while also taking care of their children.
You know, there's a lot to unpack from that article there. And if you haven't read it, I highly recommend that you do read it, because there's a lot of interesting caveats to this, right? As they talk about staggered in and out workflow. I mean, and that's something for put the coffee down. Kind of going through that,
It is.
Right?
It definitely is. We've touched on a lot of working from home themes and returning back to work. We kind of touched on a couple weeks ago with Trent Brobrook from truckstop.com.
Yeah.
But we'll probably do some follow-ups on that. And I think this is an article and a topic that will keep getting more and more traction, and we'll see it more and more as companies throughout the economy start coming back to the office, and how they do that and the trial and error. That we're going to see.
Yeah, there's got to be trial and error.
No one knew how to go exclusively work from home. Now no one knows how to come back.
No one knows how to come back, and in what type of schedule. They talk about staggered schedules, right? Well, it can't be every other day, because the efficiency is going to be horrible there, and doesn't that expose you more to possible infection and spread if you're every other day?
It does. So there's a lot of questions to really unpack. And we have some comments here. Thomas R. Oswald, safety manager at CDS, says, "Hello, guys." Catherine Whitehouse from Jonesers Express, good afternoon. And our friend Stephen Elliott, wow, another reason I admire our drivers. I hope they are all safe.
Yeah, amen to that. I echo that.
100% agree with that.
Because the other thing in that article too that I want to bring up really quick, and when you need to read this and kind of look through it, is a lot of these companies, their staffing levels are based on reduced. They've got reduced business. One, right? But then they've got the PPP that is helping support and keep those levels there. So how quickly it comes back and how people are coming back, and then you got the real estate versus the head count and trying to social distance within the business and all that kind of thing. There's just so many different angles and different storylines behind this and things to consider on how to bring it back. It's not as simple as, hey, we're open again.
It is not. We have our FreightWaves branded face masks over here to the side here.
Exactly.
Andrew, Amazon Air is expanding, or Amazon is expanding its air capacity. What do we have there from, I believe, Eric Kulich?
Yep, Amazon said Wednesday that it is going to lease 12 more Boeing 767s, which have been converted to cargo aircraft from Air Transport Services Group. This is to grow its in-house air network. The additional aircraft will bring Amazon's fleet to more than 80 aircraft. One of the new aircraft joined Amazon's cargo operation in May, and the rest are set to order and be delivered through 2021. Amazon said Amazon Air is also rapidly expanding its airport infrastructure to handle the bigger fleet. The company will open a new regional air hub at the Lakeland Linder International Airport in Florida later this summer, and as FreightWaves reported, at San Bernardino International Airport in California next year. It's also opening in 2021 is Amazon's Global Air Hub, which is going to be based in the Cincinnati, North Kentucky region. It'll be open in 2021.
Amazon keeps on expanding its logistics network. We actually did a podcast, Andrew and I, with JP Hampstead on Tuesday afternoon that you can find in Freightcast and tv.freightwaves.com, talking about Amazon Relay. And that's their digital freight matching for trucking and its growth and market share. Any thoughts on that going along with the air expansion, Andrew?
Sure, Kevin. Amazon is really seemingly in an M&A mode. We're hearing a lot of rumors. It first started with AMC, and then they've moved on to other things. They're eyeballing a $2 billion takeover of one of India's largest cellular networks. So they're really in expansion mode right now. They've had an incredible beginning of the year. They've even grown larger. They now make up over 40% of the e-commerce market, and that's in a market that's grown significantly during this coronavirus lockdown. So I think it's kind of all hands on deck and moving forward for Amazon. They're going to expand in pretty much everywhere they can in the next few months.
Yeah, and Alibaba has responded, and we'll have the CEO of FreightWave or FreightTotes.com talking about that partnership on digital freight matching for ocean and air a little bit later on. We also have Navistar. Alan Adler covered that earnings report. And what do we have from the OEMs?
Yeah, Kevin, Navistar reported nearly a $40 million loss in its fiscal second quarter because of production suspensions and supply chain issues related to the COVID-19 pandemic. The loss was narrower than the nearly $50 million in red ink reported this time last year, when the truck maker took a $159 million charge to settle complaints over defective engines and trucks built in the previous decade. It's really going to be a historically bad year for most of the OEMs. If 2018 was a banner year for orders, so there's still a lot of young capacity in these fleets out in the U.S. Daimler has just picked up production this week. They had tried to pick up production back in mid-May, but had difficulties with the Mexican government getting their plants reopened. We all know how intertwined the American and Mexican car production supply chains are. Daimler is now expecting that production will likely be down about 40% in 2020 compared to last year.
It's going to be like you said, it's going to be a difficult year for them to navigate through. With the, like you said, the young fleets, and then you've got the used truck situation, which we covered last week, and then the uncertainty of will there be a flood of used trucks actually hitting the market? Will the smaller carriers drop out as we go forward and the PPP starts to diminish or go away? And how well does the recovery go? Does it continue its upward trend? It almost certainly has to come back down. We'll talk about that a little bit later in some of those indicators and on subsequent shows as well. But it's got to be a really difficult thing to navigate right now.
It is, yes. And thank you so much, Andrew Cox, for the news headlines. You can catch these stories and a whole lot more on FreightWaves.com every single day. We have a couple of shout-outs here, echoing the driver safety story. Mohammed Bosselman, internship trainer at Caxi Transit, responding to Stephen Elliott, talking about trucking safety, real heroes, echoed again by Kenneth Carter, our friend here at FreightWaves. Definitely solid advice.
Yeah, absolutely. Stay as safe as possible.
Stay safe.
Dangerous times, don't be a hero.
Don't be a hero. Be safe out there. And freight is picking up, so stay safe to pick up another load, right?
Yeah, exactly.
And we have Zach Strickland, our Director of Freight Market Intelligence, here to talk about what's going on in the trucking markets. What do we have today, Zach?
Hey, Kevin. So, yeah, the volumes for the second day in a row consecutively, we've seen a decline in the outbound tender volume index. It's kind of expected at this point. Obviously, it's not anticipated that we see the same unprecedented rise that we saw in March as we kind of progress through what appears to be a V-shaped recovery in the at least the freight volume side of things. Now, it hasn't particularly translated into the spot market, like it did in early March. So, where we're sitting right now, around 11,000 on the OTVI. Back this point in March, when we were crossing that 11,000 barrier, we were approaching a 12% tender rejection rate. Right now, we're sitting at about 5.29% on the tender rejection level. So this is indicative of the fact that carriers have been, like we've said before, kind of, stalled out in April, willing to take just about anything that comes their way during this, recovery period. A lot of freight moving right now, and they're basically just doing whatever they can to pick up all these orders, especially on their contracted side. We have not seen the same growth in the spot market that we saw back in March on the same level of volume.
Yeah, excuse me, Zach. It's interesting looking at those numbers and the charts and looking at what FreightWaves now this morning. Your report on the OTVI as well and what's going on. This 2-day dip after the Memorial Day, the recovery, right, which we saw came up and it was 11,304, I think was the high 2 days ago, and now it's just above 11. It's not odd for that, right? Over the last couple years, the same trend kind of there's a spike and then kind of a trickle down or reduction for a good solid 5 to 7 days, right?
Yeah, no, I think this is, the 2-day dip is not really necessarily that concerning to me. If you're a truckload carrier out there, I'm not panicking about, volumes just plummeting back to where they were. No, we have this kind of Memorial Day effect, if you will, where you have a compressed week last week. So a lot of freight moves out at the end of the week. A lot of shippers are already ahead of the game on a lot of that. They've taken vacations. And then again, end of the month kind of pushes a bunch of freight out. And then we see this beginning of the month lull that's pretty consistent throughout the year on most months, especially the second and third months of the quarter. So I don't think that this little notch down is necessarily us returning to normal, as it were to speak. But it's still we're still on an upward trend, and 11,000 on OTVI is still tremendous. It's as high as it was back in 2018 when we thought the market was super explosive.
Yeah, exactly. And you look at it and you look at those numbers and you think about the economy and where we're at right now trying to recover and watching the different trends. It almost has to come back down somewhere in the lower mid tens, I would think, relatively soon, right? And one of those things, as Mike Bowden-Distel this morning was talking about, I'd like to get your take on that as well, is the rail volumes and the long haul volumes out of Southern California. Do you have any insight on that or any take on that?
Yeah, the Southern California markets of Los Angeles and Ontario, basically a huge DC area, warehouses and whatnot, really robust growth in the month of May. Probably the strongest growth of any of the major markets in the United States. Los Angeles, again, capacity was actually tightening out in Los Angeles, still continues to tighten as we speak. One of the only areas that it is doing that, due to all this long haul volume growth. We've seen a tremendous amount of long haul freight coming out of there. We think that a lot of that has to do with the imports. There was a surge of imports into the West Coast in the end of April, early May. A lot of that freight gets shoved into warehouses before it's ready to ship across the country. Again, a lot of these warehouses were shut down. And factories were shut down all the way through mid-May. And then once they start to reopen, they find that a lot of their shelves are empty, or it takes a little bit more inventory to get things back running again. So I think what we're seeing is kind of that initial cranking of the engine, if you will, as people return to work, start turning the lights back on and getting some of that freight moving back in just to get up to speed. It's not necessarily that demand has to recover to get freight moving again, but the fact that we're restarting does require a little bit more effort.
Yeah, a bit of pressing the primer ball on your two-stroke engine, right?
Exactly.
Yeah. It's like you talked about rates a little bit earlier. We have a comment from Andres Gonzalez. And mostly caps and a lot of exclamation points. No more cheap freight. Don't take cheap freight. You were talking about this on FreightWaves Now, or you're talking about rates on FreightWaves Now earlier this morning, and comparing that where we're seeing 2020 right now in comparison to 2019. Could you go a little bit deeper into what you're seeing in the data?
Yeah, so 2019, I think we're actually finding out that 2019, even though the volumes didn't fall off as dramatically as you might anticipate, again, this whole disparity between demand and supply. Demand does not always drive rates up. It's that supply side that's largely invisible to the large part of the market that you just can't tell, if the trucks are in the right places they need to be or not. And I think what we're seeing right now is, the carrier willingness to accept a bunch of freight, but the volumes are high. And so these rates, it's not comparable to last year in the way that, we were coming out of this really soft May, volumes were down, it dragged rates down, but the market was very stable. It was kind of this slow decline out of 2018. So right now we're actually seeing the average spot rate exceeding that of 2019, at least through the end of May. It's a little too early to tell about early June just yet, but we had Roadcheck this time last year that really had not necessarily volumes increasing, but supply side capacity was coming off the road as a lot of people just chose to park their trucks and not risk getting a citation. Instead of dealing with all that, volumes were down already. So the risk of getting a citation almost outweighed the cost of moving the freight at that period of time. So right now the spot market is actually a little bit better than it was in 2019. Will that remain that way? Yet to be seen, but at least for this short period of time it appears to be.
Yeah, so Zach, interesting you're talking about, that visibility into the supply or the capacity and where it's at. And so what immediately comes to my mind is really looking at that inbound flow versus outbound flow, or the haul index and the relative how those haul indexes are changing in the different markets. And you can see that obviously in SONAR and kind of monitor that on a day-to-day basis and see, is the haul index or the relative percent of outbound growing because inbound is shrinking and outbound is growing, or is it just outbound growing and inbound is staying the same? And you can see kind of those pressures for, tactically and really near short term, what is happening and what is going to happen to those prices and those capacities. But with that being said, when we were talking about this before, a lot of those markets that were hot were obviously DC centered type of markets, right? Are we seeing the same thing now with the OTVI? Are those still hot, or are those starting to cool off, or is that shifting? Are you seeing any shift?
That's exactly what's happening. We're still seeing that DC freight. Los Angeles, Ontario, obviously the biggest centers for DCs out there. Lakeland, Florida. Again, it's a very robust market for a lot of DC growth there for the food and beverage community. Up there around Allentown, Pennsylvania, Harrisburg, a lot of DCs sitting in that eastern Pennsylvania area around the railheads. Columbus, Ohio, again, another kind of DC area that's been very strong. The one thing that is changing a little bit is that the Midwest has turned back on a little bit more this week in relation to the rest of the country. It has been a very slow past 18 months for the Midwest. It's kind of died off in terms of freight volume potential. But again, the automotive sector weighing heavily up there, a lot of freight volumes moving again as they turn the factories back on up there. So there is a little bit of difference, a little bit of change up there, but it's still a very DC heavy market right now.
Yeah, it all depends on the restart and how strong that stays, right? I mean, that's what we got to look at. There could be that big dip if the startup, the priming of the engine, and then there's nobody, demanding it. So
yeah, Zach, you guys, you and Anthony do Freightonomics every Wednesday at 2 p.m. Here, what did you guys talk about yesterday?
Yeah, we talked about how we're seeing kind of this lag. Is the macroeconomy leading the freight market, or is the freight market leading the macroeconomic indicators? And we're seeing orders year over year decline. Again, some of these indicators come out a month late, so we went into detail on some of those factory orders, so people don't get too concerned about that. But something that I pointed out yesterday was the fact that some of these shippers were canceling orders in April, back when the market was actually at a bottom. So some of that sentiment spilled over into May, and it turns out that a lot of people are actually turning back on a lot faster than they anticipated. So we may see a pretty quick recovery here towards the end of July as people are starting their unblinking sailings. We've talked about that before, Mike. There's this real uneven recovery pattern developing right now as shippers even struggle to manage the uncertainty of the next couple of months.
Yeah, absolutely. Uneven, fragmented recovery, and that's why you need that daily information and digesting it and really understanding what is going on. Get that expert opinion on top of the data and the trends that you're looking at, because things are changing rapidly. There's no doubt about it.
They are. Thank you very much, Zach.
Thank you, Zach.
Again, that's Zach Strickland, our Director of Freight Market Intelligence, and you can catch him and our next guest, Anthony Smith, our lead economist, every Wednesday at 2 p.m. on Freightonomics, and you can also download those podcast versions on Freightcast or Apple Podcasts, Spotify, wherever you download podcasts, or at FreightWaves TV. And then we also have a comment here on LinkedIn from Thomas Oswald, again, safety manager at CDS. And he says, and I think we all, anyone on the carrier or even the broker side would agree with this. Too bad the rates aren't at 2018 levels. We're hoping carriers aren't taking the brunt of the hits right now. So hopefully the freight markets, the rates catch up with volumes for those carriers out there. But it is Thursday, and every Thursday we have initial jobless claims, and our lead economist here at FreightWaves, Anthony Smith, to break down those numbers. So what do we have today, Anthony?
That's right, Kevin. It's Thursday, and that means weekly jobless claims have just been released and updated for the most recent week, and we've seen that it increased by 1.8 million. And so this increase now brings the total to 42.6 million over the last 11 weeks, or since the coronavirus pandemic initially started. So this is now below that 2 million threshold, but it's still a lot of Americans as we're in the 11th week of this pandemic or since it's been officially announced. And so that's really telling to show that there are still many Americans, many of these numbers are showing that there's a small number of Americans that are applying multiple times that have already been rejected once. And so, of course, as we always talk about, there's a backlog of employment benefits being received or actually being put in. But still, this is a staggering number to be 11 weeks out nonetheless.
Yeah, it's kind of, Anthony, I would liken it to some of the other macroeconomic data that's coming out is that you said 1.8 million. I think it was 2.3 last week or so. It was over 2 million last week, I think. But it's declining. But it's a lesser degree of terrible, right?
That's right. So just as you said, it's a lesser degree of terrible. And that's, I think, going to be the theme for a lot of macroeconomic indicators. I mean, when we look at some of the stuff from the ISM, for example, or some of the other macroeconomic releases, they are still very much bad, but a lesser degree of bad. And so it's one of the things when you're down so long, does any kind of blip up seem like exponential growth or not? You have to really monitor these things with a perspective. Now, one of the other things that was released in addition to this report, or within this report, was the continuing claims addition as well, these insured claims. These are individuals that have received unemployment benefits and are continuing to claim unemployment. Last week, we saw the first decline since the coronavirus pandemic really ramped up. And this is one of the areas that I really recommend watching and honing in on because it's going to be a telling sign to see whether or not we are in the midst of a recovery for many Americans getting back to work. And what we've seen in the most recent continuing claims number was that there was actually an increase from last week. So now the total stands at 2.15 million Americans, and that is an increase of around 650,000 employees or Americans from last week's report. So this is showing that there is a blip up in continuing claims, showing that more Americans are indeed filing. This is telling because it's showing that we're not quite out of the woods just yet. And I think it kind of harkens back to some of the releases that we saw last week. I know I chatted with Andrew Cox on FreightWaves Now last week when we were looking at consumer spending, despite some of the efforts or many of the efforts from the government incentives for or bonuses for unemployment benefits. It's down despite having more income for many Americans. And so that really speaks to the uncertainty, the mentality of many Americans right now. Even if they are receiving unemployment benefits, they are still uncertain about their future, their financial standing. And so it's going to be very telling to see how much of an impact as we see larger metropolitan areas start to reopen this month, like New York, for example, start to really kind of reel back some of those restrictions. How much of that is going to really start to impact these jobless claim numbers and, again, some of that consumer confidence for right now? We all know that a lot of Americans are a little bit more optimistic about the outlook 6 months from now, but many Americans where they're struggling is they're right here, they're right now. And that's showing up on retail sales numbers, that's showing up on consumer spending, and that's definitely showing up on some of these jobless claims benefits that's being sent in throughout the nation.
And Anthony, we have the monthly unemployment numbers for May coming out tomorrow, which is based on a different methodology, different data set than our initial jobless claims or continued jobless claims. So sometimes, especially in highly volatile times like we've just gone through, they're sometimes disconnected. What are we expecting? What's the consensus out there for the unemployment rate for May that comes out tomorrow?
Kevin, you hit the nail on the head on that one. So when we're looking at some of these jobless claims numbers or unemployment numbers or anything in this realm, there has been a bit of a dichotomy between some releases like ADP and the initial jobless claims. For the unemployment rate, I think the expectations are somewhere near that high teens to low 20s mark. So that's really the expectation for this upcoming release, is having unemployment numbers somewhere where in that low end or median range of 18%. Anywhere upwards of 23%. So it's safe to say that I wouldn't be too surprised if I saw a jobless or unemployment rate around 20 or 21% come in tomorrow.
Thank you very much for those economic stats, Anthony. We will all be glued tomorrow morning whenever the monthly unemployment numbers hit. And thank you again. Our lead economist here at FreightWaves, Anthony Smith. And we also have Andres Gonzalez from Facebook. Freight market needs broker transparency and regulation. So there's still calls for that. So the price wars between brokers and carriers are definitely still alive.
Yeah,
but we have
it's
Jason
going to continue
Miller
for a while.
I know we do.
Yeah.
We do have Dr. Jason Miller, who's an associate professor at the Eli Broad School of Business there at Michigan State University. And how are we doing today, Jason Miller?
I'm doing well. How you guys doing?
We're doing good.
Doing great. Welcome, Jason. Nice to see you. Thanks for coming on.
Thanks for having me.
Yeah.
Hey, we were having a bit of a discussion over LinkedIn a couple nights ago, and since then, really, we've seen some ISM and Fed numbers come out that I think would be very, very interesting for us to go through today. So. Can you kind of tell us what you got there? You've got some charts for us, some plots that you have done, kind of combining the two there, and some analysis there as far as what we're looking at as a recovery right now, and kind of what are the macroeconomic information, at least the ISM numbers and some of these Fed survey numbers, the diffusion indices, I guess, or indexes. What are they telling us? What are you seeing?
Yeah, so I think the first thing to always begin with the ISM data, and about 5 of the Federal Reserve banks do essentially an identical survey of regional manufacturers, is just what these mean. These are more momentum indices. They're not telling you the absolute value of anything. So you could have one manufacturer that sees their sales decline by 80%, 2 others see their sales go up by, let's say, 5%. That's going to be a positive reading. So this is much more of a momentum, not absolute value. So you just have to keep that in mind as you think about it. So I like to compare relative time periods. So if we take a look at where we were at with May for production, it was better than April, but it was still down substantially. If you take a look at May's reading, for production, it's somewhere in the realm of where we were at the bottom of the Great Recession. So we have a substantial amount of upward movement that we can go. Now, the question is well, how well will we be able to start seeing industrial production coming back? And in that regard, there's sort of a good news and a bad news with things. The good news is the fact that our backlog data is not showing nearly as precipitous of a drop as it did during the Great Recession. Now, that makes sense, though, because you were running into a situation where factories were shut down rather than maybe curtailing production and cutting back a shift or shutting down a line. The bad aspect, though, that we're looking at is new orders data is still very, very weak. And so the concern that I have is as we start seeing more production come online, is if we don't start seeing the new orders tick up, we will start burning through those backlogs, and then we're going to be staring at a traditional demand-side recession that can take a long time to come out of.
In that first chart we had up what was that, Michael?
First was production.
Production. Okay, so those are production numbers, steep drop, a pretty sharp comeback. I mean, nowhere near normal, but that's going to be encouraging. What are you seeing in the backlog specifically?
Well, for me, from the backlog standpoint, it was the fact that if you look in the past, we'd see basically new orders and backlogs are very strongly related. So whenever new orders drops, backlogs tends to drop by a similar margin. This was sort of the first time we didn't see that happen. You had this massive decline in new orders, but then backlogs didn't drop nearly as much, which to me is telling that story of the reason for that drop. The fact backlogs didn't go down as much as industrial production was at a standstill in April. And so that to me is the one positive you can take away from this data, but it's still suggesting that the manufacturing sector is nowhere near recovery yet.
So what kind of numbers would we be looking at? I mean, so these and they're called diffusion indices, right? I mean, they're surveys, they're momentums. They're not tangible. These are the momentums. What is the feeling, the mood out there, based on surveying those experts that are in the industry? Correct? Is that a fair layman's kind of explanation of it?
Yeah, so it's surveys directly to folks at manufacturing companies and basically asking them, are things increasing, decreasing, or staying the same? And what happens is you calculate the percentage saying there's an increase, you subtract out the percentage saying a decrease. So 0 is essentially your baseline value, for lack of a better term.
Gotcha. And so these upticks that we're seeing would still indicate I guess, contractionary momentum, but less contractionary. Is that right?
Exactly. Yeah, that is the exact correct interpretation.
Okay, and so those were taken. So these numbers just came out. So these were from surveys from the beginning of May, right?
Yeah, beginning in mid-May. Yes.
So when you look at it, in our discussion, we were looking at outbound tender volumes and the increase and so on. What is your thought there? Do these numbers indicate that is going to drop off, or do you think that the outbound tender volumes and the uptick in truckloads is going to show that these numbers, when they come out next, will be even higher or possibly out of contraction? What are your thoughts there?
Well, I would say right now, June is always a very strong month. So I'm expecting to see outbound tenders in June looking fairly strong from a seasonal standpoint, regardless of whether we're seeing a manufacturing recovery. I mean, we see that as an example. DAT's load to truck ratio is always substantially higher in June than it is in May or in July. So I think what we're seeing right now with the outbound tenders, I think a lot of that is consumer driven at the moment. I mean, if you take a look at where outbound tender volume is up the most from a year ago, and we may have a little bit of capturing Memorial Day of 2019 yet in that comparison, but some of your biggest increases right now are Allentown, Pennsylvania, Columbus, Ohio, which are very distribution-heavy areas. Whereas if you look at, let's say, Joliet, Illinois, and Chicago, Illinois, which would be more sort of intermodal type of markets with a lot of the rail freight coming into Chicago, they're actually down, which echoes what we're seeing in the Association of American Railroads rail data that's showing railroad is still really hurting right now in comparison to 2019. So to me, when I start thinking industrial recovery, where I'm focusing a big chunk of my focus on is going to be rail, maybe not so much the intermodal containers, just for the fact you do have, a depressed trucking market at the moment with regard to rates. And so that's going to be stealing some of that long haul intermodal volume. So from my standpoint, what I watch the closest for a true industrial recovery is going to be the rail data, especially chemicals, looking at auto, which is finally ticking up, but is still nowhere near where we would expect auto and motor vehicle and part movements to be.
So, Dr. Miller, Jason, we've talked a lot between ourselves about what a recovery would look like. Let's focus on manufacturing industrials. And it's been a few weeks since we've discussed this. What's your outlook on the shape of a recovery? V, W, swoosh. What are what's your sentiment right now?
I'd say my sentiment right now is definitely on the swoosh aspect. I just don't see that V shape. There's going to be. We're not going to have the economy going back to the way it was. I mean, we can even see that with regard to factories not running at full capacity. You're going to see a lot of retail establishments are going to go under this next year. So I just don't think there's too many. There's going to be a substantial number of bankruptcies once we get out of this very strong government stimulus period over the next couple months. And so for me, it's more of a swoosh-like recovery with the caveat of we don't know yet what's going to happen with a potential second wave of cases.
Excellent insights, Jason. Thank you so much for being with us. I think maybe next week on Freight Forecasting, Jason will be coming out. We'll see what's going on with some more macroeconomic data and so on. Hey, Jason, thank you so much. And how do people reach out to you, Jason?
Either connect with me on LinkedIn or just throw my name in Google and type in Michigan State afterwards, and it'll pop up my webpage and email, and just shoot me an email.
Right on. Thank you so much, Jason.
Thank you, Jason.
Hey, thank you so much.
Always an interesting discussion with our good friend Dr. Miller.
Very insightful. Puts things in very concise, easy to understand terms. Which when you start talking about macroeconomic terms, it's you get confused a little bit, right? They're better, but still contractionary is kind of contradictory. But
it is. And over
really,
the last few weeks, probably the last 6 weeks, he's really become active on LinkedIn with those very concise, clear charts of government data and his explanations of that. And he's very interactive on there. So I definitely encourage everyone to go out there and connect with Jason Miller and start following his content on LinkedIn.
Yeah, absolutely do it. He's a very insightful guy. And I thought it was interesting because we've been talking about that, and we touched about earlier in the show. We touched on it with Andrew a little bit. Is this after the stimulus, the PPP comes out of it, even during the recovery, he expects to see a number of failures of bankruptcies occurring, which is not good news.
A couple comments here on LinkedIn. Stephen Elliott again. Is there any sense of how Canada is doing, or is the data only for U.S.? And SONAR data does have load volumes and other metrics for the great country of Canada.
Yeah, there are.
Mm-hmm.
There are.
And Todd Walker, business development officer here. Small trucking companies taking the brunt of this economy, unfortunately. Hopefully things get better for all sooner rather than later. Thanks for the great info and reporting. And with that, we have our next guest joining us via Skype. And that is Ruthie Amaru she's the CEO of FreightWaves.com. How are you doing today, Ruthie?
Hey, guys. I'm doing great.
Nice to see you, Ruthie. Thanks for coming on.
Sure. Great to be here.
Yeah, so let's talk about the announcement of your partnership with Alibaba, where you're powering the digital freight matching platform.
Yeah, well, I mean, we're really, really excited to be working with Alibaba, the largest e-commerce site, Alibaba.com for B2B, and FreightWaves.com. We've been around for 3 years, a digital marketplace for freight. We're focused on making it really, really easy to ship. And that was a great combination. Alibaba was looking for ways to make it even easier for U.S. SMBs, small buyers to source in China and then get their goods easily. And they did a really long search to see what's the right kind of partnership to just make it easy to get the goods, source the goods, procure the goods, and then ship them all the way to the warehouses and ready for fulfillment in the U.S.
Yeah, so excuse me, I'm sorry. I didn't mean to interrupt you there. Go ahead with your thought.
Yeah, no, so really the launch has been really great, really successful. We have great customers coming on, buying, shipping goods, coming back to do it again. And so, we've really been enjoying this partnership.
What I was going to say, Ruthie, is you gave a really good explanation of what Alibaba is, and I don't think we gave you a chance to really talk about exactly what. Give us a background on yourself or Freightos so we can see the full circle of this partnership and why it makes so much sense.
Sure, great. So Freightos is a company that's been around since 2012 to digitize freight. We came on the scene when it was all about faxes and phone calls and just impossible to really make that work. And it was pretty clear that somebody needs to come along and disrupt. Freightos has a products to make freight forwarders digitally enabled, so to enable freight forwarders and carriers to work totally online. And then Freightos.com is a marketplace that brings that online freight all the way to the end users. So it's kind of an Expedia for freight. So if you're shipping a container or a bunch of pallets from anywhere in the world, and you just want it to be stupid simple, then you go to ship.freightos.com or Freightos.com and you plug in, where's my stuff? Where do I need to get it to? You get a bunch of quotes because what we believe is the power of a marketplace is the power of a community of competitive quality service. Same as you want that on Expedia or any other marketplace. So we've built a marketplace with tens of suppliers, so close to 100 different freight forwarders and carriers are available, and their prices are right there on the spot instantly. And that's been, it's so obvious that the question is why it wasn't there before, but it wasn't, and now it is, and that's what we've done at Freightos. And so plugging that into a B2B marketplace was really a kind of easy next step.
Yeah, so the Freightos, the platform you're talking about is a door-to-door solution, correct? So they can go get a door-to-door. So that makes complete sense. It sheds the other side of why this partnership is so powerful, because now you have in a good match is because now you have this door-to-door solution, but then you have also the resources for and accessibility to actually source those goods together combined. That makes complete sense.
Exactly. And you have the ability to really choose how you want to ship it, by air, by ocean, express, all kind of right there, including customs and anything else you need. So, yeah.
Yeah, I noticed, Ruthie, you talk a lot about disruption. Where do you see disruption in certainly the international digital freight matching and kind of that door-to-door service, or where do you see the biggest chances for disruption going forward over the next few years?
Well, our first step in disruption was really making prices available instantly. No need to call and wait and wait days. You just get it right there and right then, publicly available. And some brave logistics providers said, hey, we need this business. We want this business. We need to be transparent. So that was the first level of disruption, is just bringing it right out to the web in a way that it hadn't been before. And that disruption has now made it possible for the next level of disruption, which is allowing U.S. importers to control the freight all the way from the factory, and not to rely on factories to just ship it to the port, and then they have to figure out how to do that. So it's a real empowerment for the small and mid-sized shippers who want to be able to control the price, control the speed, and really control that, but without all the work of having to deal with logistics and freight and learning how these things work, and just having a 1-2 step kind of integrated environment to do that in.
Ruthie, speaking with you, I'm really interested on your take on trade wars coming out of the pandemic, restarting the economy, looking at our supply chains, et cetera. You're obviously very knowledgeable in international trade and the operations thereof. Changes in supply chain, diversification. What do you see moving forward? Not necessarily a prediction, but there's certainly some huge hurdles there, right? I mean, when the general public or even the general public within logistics who's not familiar with the intricacies of international supply chains look at it, they think, well, that makes sense. That'd be easy. They need to change that. Not so much, right?
No, I mean, it's been a wacko 12 months, and we've watched the surges. But, one of the interesting things I'll just point out is that the small or even micro importers, the small businesses, have stayed strong throughout, and that's been really interesting to watch. You'd think that the first people to suffer would be the tiny businesses, but actually they're ending up being the most flexible. Those that are able to change what they're doing, move where they're sourcing, really respond to whatever's happening in the market. And we've actually seen a surge throughout over the last 12 months, even with all the disruptions in trade, COVID-19, and the numbers are just going up and up and up. So clearly there is a very resilient market out there of importers and exporters and of commerce that is really taking advantage and growing even through these complex and challenging times.
They are certainly complex and challenging, aren't they? They certainly are. How about future partnerships? What's kind of in the works or the groundworks for that side of the business?
So, really because our focus is on freight and moving goods, there are a lot of B2B e-commerce sites out there growing now. None as big as Alibaba.com or as well developed, but many of them are coming to us and working with us, and we have a number of partnerships where we supply the easy freight in the context of that B2B international e-commerce. And by making it easy to move the stuff, you can now source it wherever you want in the world. And that's really where our focus is.
Thank you very much for that answer and your time today, Ruthie. How do people reach out to you and contact you? And FreightWaves.com.
Yeah, sure. Just go to FreightWaves.com. We have FreightWaves.com. We have all the contact information. You can find me on LinkedIn. Happy to chat with anybody.
Great.
Thank you so much, Ruthie.
Okay. Thanks, guys. Have a great day.
So we have some comments here from LinkedIn to go over. And Mark Horowitz from RPM says, "Go Green," and I'm sure that's a Michigan State reference.
Yeah, go Sparty, right?
Yes. And then the one and only railroad man himself, Jim Blaze, says, "Thank you, Jason, for those rail observations." And Sam Litzer, president at Truckers Report, agreed. Jason Miller's posts on LinkedIn are the most consistently insightful content I see.
Yeah, they are excellent, and that was a really interesting conversation with Ruthie and her take on what they're seeing as far as numbers in international trade with the e-commerce that is going on, and
it's a good place to be positioned right now.
It really is.
E-commerce. I mean, we've seen certainly a big boom in e-commerce since in the last 12 weeks during the pandemic, and I think that trend, while it subsided a little bit, that trend was already there. It just accelerated, and I think this is going to accelerate it even more as we talk about working from home and not going out as much, not going to as many physical stores, and we see that with the department store retail spending, which is down 40% year over year right now.
Yeah, the brick and mortar.
The brick and mortar. You're seeing the rise of curbside pickup, where you order online, then drive to the store. And, with delivery delays, that's made that business and that model much more attractive. And I think that's something else that's going to have some legs going into the future.
Yeah, absolutely, in the e-commerce. And shall we do some...
Let's do some good news.
Yeah, okay. So what's good? FreightWaves.com, amid protests, freight tech companies wary of business as usual. We talk about the economy all the time on the show, and so now it's not easy feat to raise a fundraising round during these tough economic times, right?
Sure.
You're trying to do a fundraising for your business, and here's COVID-19. So, of course, you'd want to celebrate it if you did close those funds, right? So an anonymous supply chain technology startup was decided to delay the announcement of a successful fundraising round scheduled for release this week, citing the need to focus instead on the battle against racial inequities. The company's CEO tells FreightWaves in an email, "The postponement of our announcement aligns with one of our core values, empathy. We chose instead to invest our feelings, thoughts, and our actions in standing with our community in the fight against racism and injustice. This highlights the sensitivity of the situation that companies should be aware of and how they position themselves in times of crisis." The other thing is, it's an anonymous post. It wasn't, "Hey, look at us. We're company ABC, and we love you so much that we're not going to do this." It was completely anonymous, and that's the right way to do things, right?
It is, yes.
Your character when those aren't looking matters.
Yeah, your
right?
actions when those aren't looking is what character is, right?
Yeah, and I don't think the good thing isn't that they had to delay it because of what's going on, and it's certainly not a good thing of what is going on, but there's good that's coming out of it, and this type of sentiment is what is good, and this type of action is what is good. Setting aside the betterment of the company or the celebration of this company in order to deal with what is absolutely a core issue in our society.
Yes, and hopefully
it's an excellent thing.
Hopefully everyone stays safe out there on that. So coming up at 4 p.m., we have Freight Forecasting with Michael Vincent. Who's your guest today?
Yeah, so Mr. John Kingston, editor-at-large, will be on with joining myself and Anthony Smith, our lead economist, and we'll be talking about going into some of the other verticals and deeper into the ISM numbers that Jason Miller was speaking to earlier. Mm-hmm. So we'll be looking at those, and we'll be digging in a little bit more to those BMO numbers that we were talking about, the impaired loans and the write-offs, and what those could possibly mean for the recovery, and what the recovery could possibly mean for those numbers, because it goes both ways.
You might also slip in some BCO numbers, which is business capacity owners, which is the Landstar term for the leased owner-operators, and how that adjusts over time. And how it fits into to capacity.
Yeah, definitely.
It's very interesting. Or maybe you do another show next week just based on that.
Well, maybe. I don't know. Yeah, I think I'm going to have Jason on next week, and we're gonna continue our discussion that we had on LinkedIn.
You should, because it was a very interesting discussion. And if you haven't seen it, go follow either Jason Miller or Michael Vincent, and you'll be able to see that action on there. It's a lively discussion on LinkedIn. Tomorrow at noon, 12 p.m. Eastern Time, we have What the Truck, and we have, or you guys have, Michael Vincent and Dooner have a great and awesome guest.
I mean, the last couple of weeks, yes. I kept billing What the Truck, right, yes. for Friday, and I'm not going to tell you what's going on. You're just going to have to trust me. And what did we do? We delivered.
You topped yourself, man.
Even last week,
you did deliver.
90% chance it's going to be out of this world, and it was.
You're exactly right. So who is
this it? One's not going to be actually out of this world that one was.
This one's going to be into the future.
But it is into the future.
We're going to go into the future.
We're going back to the future. So so it's an absolutely stacked show. We've got Nikola CEO Trevor Milton on to share their big news. Molo CEO Andrew Silver talks about the generous donation his company has made to the St. Christopher Trucking Fund and other things, which he made on What the Truck earlier this week on Monday live, which was awesome. And then let's see, we have who else we have? Oh, White Logistics CEO Hope White on diversity in the supply chain, and Wayne Craig, who's joined on the road with Dart Network CEO Dave Abels as they dial in from their fund driving drive. And right before we came on, did you see his post? Did you see?
I did not.
Wayne Craig's post.
I did not see it.
And so there wasn't a lot of details. It was a short video of him walking through the woods on a trail, saying truck broke down. We're going by foot to Egan. So I don't know what's going on there, but
oh my!
So put that coffee down. What did you guys talk about?
Put that coffee down. We did yesterday at 12 p.m. Eastern, like we do every single Wednesday, where you can find it on FreightWaves TV on demand. You can find all these shows on demand right now. We had Trey Griggs from HubTech. He's the sales director over there, and we compared sales to The Last Dance.
So what were some of the key takeaways there? That was a great show.
It was a lot about leadership, but it's all about determination and that small but significant difference between greatness and the greatest of all time, or being at one level. There's usually just a small but significant thing that pushes you over. And just being really highly competitive, but leadership styles too. Phil Jackson.
Yeah.
So I can remember his name today,
Not
right?
Phil Knight, but Phil
Knight, Phil Jackson, and his coaching style and managing difficult personalities.
Yeah. So I thought it was really interesting, because one of those edges is the consistency to motivate yourself.
Yes, yes.
Right?
It's all about Michael Jordan's.
Michael Jackson and Phil Knight.
I know, right? Michael
about.
Jordan's way that he always found an enemy. He always found his own motivation, whether that's his own organization, whether that is Isaiah Thomas. No matter who it was, he would just make somebody up, and it would motivate him to beat them. And that was one of the great qualities that Michael Jordan had, and it's something that all salespeople need: that competitive spirit, that persistence, that win at almost all costs to do that. So that was
so he'd make up an enemy.
He would make up an enemy. Yes.
So how do you motivate yourself every day?
I find a chip on my shoulder. I kind of try to compete against myself, see what I can do better each day. And I just drive myself that way. If I need to find a boogeyman to go after, then I do the same thing.
Yeah,
I create a little bit of drama to go after.
Yeah, myself included. My motivation every day is if I agree with something too much, I try and find the negative, or not the negative, but the opposite. Try and prove it wrong, and that's kind of my motivation every day.
I know.
To try and do that. I know that's shocking to you.
I know. And as we mentioned, I know, right? Great quarter, guys. You can pick that up. There's myself and Andrew Cox, and we talked about Amazon Relay and digital freight matching on the trucking side and market share on that. But with that wraps it up for this edition of the Midday Market Update here at FreightWaves.